And now our top line story. August began with stock markets under heavy pressure as weak U.S. jobs report had many investors worried about a rapidly weakening U.S. economy. Much of those declines have now been erased, and the soft landing debate seems as alive as ever. Yesterday, new U.S. retail sales and jobless claims numbers spurred another rally in stocks. Let's talk about it with our featured guest of the morning. He's Greg Newman, Senior Wealth Advisor and Portfolio Manager at Newman Group, ScotiaMcLeod. Greg, great to have you with us.
Great to be here.
This debate about a soft landing has been going on, it seems, for the longest time. Where are you on this?
Well, I do think that we needed a sell-off. This market had a huge run for many months, and you didn't know what the trigger was going to be, but you knew something was going to go at some point. And, the Bank of Japan raising rates more than expected, it does make sense that you'd have an unwind of the carry trade. There has been some softening of the data, but boy, look at this week. I mean, Tuesday you had PPI coming in good, CPI on Wednesday, which was good, retail sales yesterday, which was really good. And, you couple that with S&P earnings estimates, and for this year, 2024, they're holding at 10% growth. For 2025, they're holding at 15% growth. You have like Walmart coming out yesterday, the CEO, and saying they don't see a recession. They see prices coming down a little bit. I think it's all coming together, and I think the odds is that we're really going to have a soft landing, and the odds are. We have conflicting data. Like this morning, we had housing starts, which weren't perfect in the U.S. But bottom line is, I think that everything is queuing up to look for a rate cut in September. 75% of the market thinks that it's going to be 25 beeps. 25% think it's going to be 50 beeps. But I think it's a happy story for investors.
Wouldn't a 50 basis point rate cut send a bit of a shock to the market? Wouldn't that signal that the Fed is worried about the pace of the U.S. economy?
I think so. I think it would say that the Fed is seeing something that the rest of us aren't seeing, and I think that that's an unnecessary thing to do. And I think given the fact that the Fed was too late on responding to inflation, I think that, I don't even know how anybody really thinks 25% that there's going to be 50 rates. I think that what they really need to do is 25 and to say, you know what, we're going to do more as needed because we're a little bit tighter than we ought to be, given where the economy is right now.
And so with that in the background, and your bullish view of the markets in the macro backdrop, what type of equity weighting do you advise your clients to have right now?
Well, if you have 70-30, then I would say, still, you want to enjoy the fact that that 30 can still pay well. Unlike 3-4 years ago when interest rates were zero, you're not getting the top of 5.5 GICs or even 6 that you were a few months back, but you're still getting 4.5, 5, close to it for risk-free. So we're not exactly on our 70-30. We're more like 75-25, but we're still enjoying that 25% because, you don't know what you don't know. There's obviously a lot going on geopolitically, and, the data can change.
Okay, let's talk about some stocks that you've been watching through the course of the summer. You say that some of these are overlooked stocks, and one of them is Parkland Corporation. That's the gas station convenience store operator, also has a refining operation. For the longest time, it seems it's been in a tense relationship with an activist investor.
Right, they've got shareholder activism that's trying to surface value. There's some litigation that's gone on recently. There is a takeover offer or an expression of an interest to buy them by Sunoco at $45. Basically, there's this tug of war at the board, but what it really is a company that's trading at 10 times earnings with about a 15% growth rate. We think that they're really going to hit massive free cash flow out to 2026, 2027. And to me, this is a stock that nobody's really paying attention. You've got this nice little dividend. As I say, you've got this good valuation. And it seems to me it's a bit of a, we just heard about this, we were reminded about this $45 target. Somebody was willing to pay $45. Our analysts believe that this is a $60 story by 2020.
Do you have a view on whether the company's being managed properly?
Yeah, I think that there's always room to do better. There's always room to do better. So I think that, some lighting a little bit of a fire can always be a good thing.
Okay, Uber is another one you're watching.
Uber is just an exciting story that's taken forever to take off. They just had their earnings. They beat. I think that this is not an if, it's a when. Their valuation is still relatively inexpensive for its growth. On a price to growth, it really works. As I say, they did have their earnings, but they're still not back to their former high earlier this year. To me, no one's paying really attention. This is a name that's going to double and then double again over the next 5 years. I think that this is just a clear winner that people should be looking at more closely.
Okay, and finally, Power Corporation of Canada.
So this is a company that never gets any respect. It never really does anything. It's always cheap. It always has a decent growth rate. It's always got a nice dividend. And right now, its catalyst that we're looking at is it normally trades at an 18% discount to its holding NAV. Now it's trading at 28%. So there's some just nice upside, just getting back to its average combined with its dividend. You don't gotta have a lot of risk or tumult. There's a lot of embedded value in their underlying private equity and other initiatives that they have in the corporation. So, this is something that's not going to hurt you, and it's just got some nice upside. And I think I think the TSX to a certain extent is an overlooked market, and I think that this is just a name that speaks of that.
Okay, and can you tell us, do you own these stocks personally or on behalf of clients?
Both.
Both.
Own them, yeah.